mic. All right, we're all going? All right. Ladies and gentlemen, to finish us off, Nathan Nicols from Tax Token.
Hey guys, how we doing? As you can probably hear, I'm a little worn out too, so thanks guys for coming around at 6 o'clock to listen in. A little bit back on Tax Token before we get started. I graduated college about 3 months ago. I'm still pretty young. And the reason that I started Tax Token in the first place is I was sitting in my audit, tax, and compliance classes with all my PhDs and basically asking myself, why are there all these different manual entries or tests that are going to happen? So you'll have like cutoff testing where you literally have thousands of people going through and spending tens of millions of dollars for big Fortune 100 companies to make sure that you're compliant. When instead you can literally just have the blockchain verify a lot of transactions for you. So it's saving a lot of time. So as I was sitting, being a frustrated college student, I asked my professors and I said, are we really going to be able to keep as many jobs as we have right now? Ernst & Young or KPMG, where I was supposed to work, is hiring out 10,000 people this year. What happens when this moves forward? And these people actually did blockchain research themselves, and our tax PhD is publishing a paper on it. And they both said to me and looked me straight in the face, they were like, it's going to be right before Sarbanes-Oxley. You're going to have 20 to 30,000 people off of a 100,000 person firm basically lose their jobs because you don't need that level of auditing anymore. It's already going to be verified instantaneously. And so that was a little background about me. Also, there was another frustration that I was having. I'm sure a bunch of you guys got into either Bitcoin or Ethereum early because you guys are avid supporters. I invested into Ethereum pretty heavily in February of last year. And basically, being a tax guy, I was like, how do you do your taxes? So I was like, oh, there's got to be a quick fix. Get online, check it out, go on Reddit, Trader, different things, and it wasn't there. I looked at some different companies that tried to do everything that we're trying to do, and really you just lost your cost basis. I don't know if you guys know a lot about taxes, but there's short-term versus long-term capital gains, and that's a difference of about 20%. So if you're in a market with a multiple of 40, that's going to be a big deal to you. So basically we sat down, I pulled some of my good buddies that were extremely smart out of their corporate jobs, and I said, hey, we should really build this thing. And so at first we a couple guys with a piece of paper, and now we're building out this company. We have some of the best backers that I know and some of the best mentors, but let me talk to you more about the company. So what is Tax Token? Tax Token's building the necessary accounting infrastructure for the future. We have two main products, which is Block Books, our auditing suite, and Triple Entry Tax, which is, of course, our tax software. Both of them use our capital asset manager, which I'll talk about in the slides moving forward. But let me talk to you a little bit about the history of accounting and why we have this efficiency. And everybody talks about, triple entry bookkeeping. It's a buzzword, but what does it really mean? So single entry bookkeeping is, an ancient way of, transcribing things. It's basically, hey, John Doe owes me a goat. And, John Doe doesn't know that he owes you a goat, or you're not going to be able to figure out that that transaction through if you had a bunch of people that were selling goats that you actually were owed it in the first place. So you had the Medici family that came up with double entry bookkeeping because they were a banking family. And they basically said, okay, well, for every transaction, you should have a balanced ledger. So you should have debits and credits. If you were going to sell some of your inventory, you should debit it. You should get cash. You should credit your inventory. That way you know that everything's balancing and everything checks out. It's going to help with fraud, but it's not going to help with collusion. So if you have people inside that's trying to balance the books while being fraudulent and hiding embezzlement or different things like that, it's not going to work. So you have triple entry bookkeeping now, which is basically you're waiting on verification from thousands of people with the blockchain in order for you to say this transaction did in fact occur. So normally what you're going to have is with like an auditing, a normal audit is you'll have a purchase order, a purchase invoice, a bill of lading, and then you'll have a receipt at the end to say that everything has happened. The reason that you have all these different things is all of those different items are autonomous, which means that you need a different person for each item, which is more jobs. So you have a lot of people verifying this process and going through. But with smart contracts and triple entry bookkeeping, that form can literally just be one person doing that job, because instead of you having 4 people needing to verify and saying there isn't fraud or embezzlement happening, you have tens of thousands of people that are mining the chain saying, you know what, this is an embezzlement because a transaction's happening and you can't change it, it can't be edited. So we took all this information and we applied it into block books. And so we use a combination of triple entry bookkeeping, distributed ledgers, and smart contracts to go through a bunch of the different transactions. So rather than getting you into a bunch of accounting mumbo jumbo, I'm going to take you through a real life example of how this is going to help you. So for example, let's say you're in a logging company and you're working with inventory. Normally what would happen is you would send out an invoice for the person that's going to buy your logs in order to have them cut, maybe to go to Home Depot for 2x4s. You'll send out an invoice. That will be manual. That transaction is going to have you add a debit for accounts receivable and a credit for the inventory that says when this transaction actually occurs. At the end of it, you're going to have to go back retroactively and say that it did happen, and then you're going to debit cash, and you're going to credit the accounts receivable. And that's just a very laborious task, and it creates a lot of needs of verification and a lot of auditing when you go back through the transactions and you're working with the IRS or the SEC with generally accepted accounting principles. So we put in smart invoicing, which is we did smart contracts to say, hey, you know what, instead of doing this, you can have a transaction, you can have the wood right on the smart contract, and instead of having a non-sufficient fund check, maybe the person says they have the money in their bank account, but they don't, or an ACH transfer that takes 3 to 5 business days. Instead, you're going to have whatever cryptocurrency that you use go through and automatically do that transaction. It's going to execute, and then when you right-click, if you have the IRS saying, okay, if you have a business, where's the receipts? Where's all this information? Me, and I'm sure my system will tell you, I lose receipts all the time. I always forget about them. So instead of crumpling up and not worrying, you can just right-click right on our system and show that you have the receipt right there. Where's the proof? Thousands of people are mining the chain right there, giving you your proof. So another thing that we have when it comes to our transactions, what we're really happy about is our fees. So with invoicing, because we don't use third parties, which is Visa or MasterCard. Go ahead.
Does the system only work for people who are using cryptocurrencies for their business, or is it normal?
Yeah, so we're really happy to say that we're doing like a full integration. So a lot of people make these promises for the future, right? And they say, this is going to be big. And what we want to do right now is have some of the intricacies that, is this auto generation of journal entries. You can use things normally like PayPal, but you're not going to save on the fees. So for example, if you use PayPal, and they're going to have you transact with a 1.5 to 3% transaction fee. And that's going to take some time. There's a lot of, I don't know if you guys have used PayPal before, but if you don't have a lot of verification, they'll hold your money, they can freeze your money, they can never give you your money. And so that's one of the reasons why we really like cryptocurrencies. But yes, you can use this right now. It's just you're not going to save on the fees, and you're not going to be able to do smart contracts, which is going to be that auditability and verification. But so, for example, if you were to use, and we have 3 different cryptocurrencies that we kind of display on our product, but we use a lot more. For example, Ethereum, you would have that smart contract automatically happen. You would have text-to-block technology. So we, on your behalf, can not only say, the smart contract has executed, you get a text right to your phone that said, your vendor has received this payment. You're going to have it shipped to you in 2 to 3 days, and then it's good to go. So you have all that information right at your disposal. And then at the end of it, we're going to autofill all these relevant tax forms for you. So because you normally don't have a lot of people that can do this level of compliance, and you can't say, hey, here's all these transactions. You need a lot of receipts because they're all blockchain transactions. They can happen instantaneously. We can fill out relevant 8949 forms and Schedule Ds. Yes, sir.
Very quickly, how does your system keeps updated with the latest tax to be included in the smart contract?
Absolutely.
Automated, or you have someone checking?
Yeah, absolutely. So basically when you have, with our application, you can have it vetted by larger companies that literally only work with updating software to make sure it has the right constraints. Or
It's external from you.
right, but basically,
They feed your database for the smart contract.
exactly. So you'll have companies that are working with like the Fortune 500, for example, and they'll make sure that there's a vetting process for all of that. So it's not really done on our end, but they've been around for 50 years, so you can have security and safety knowing that,
So you get the inputs from them.
Yes, absolutely. So what are all these taxable events? So there's 4 main ones. Trading cryptocurrency for fiat. I'm sure that's why most of you guys are here. Another big one why I'm sure you guys are here is mining production. But you also do cryptocurrency to cryptocurrency, which normally people think that you can do the 1030 form, which is a like-kind exchange. You unfortunately can't do that anymore. From 2018, it's been specifically stated that you have to have real estate, brick and mortar, something like that. That's what's for the 1030. So a lot of people ask me, I've probably gotten it 50 times, what if I go one cryptocurrency to a different one, Ethereum to Bitcoin, or Ethereum to Tether to Bitcoin? No, those are all taxable transactions. So and then buying and selling goods and services. Well, obviously for me, I traded a lot, or if you're mining, you're doing thousands of transactions. And this is a big problem. You're going to have people, for example, we're working with a mining operation right now based out of Hong Kong, where they're doing tens of thousands of transactions every day. And they have 12 CPAs on staff at $100,000 plus to make sure that these transactions are being filled, they're being vetted, they're being audited, they're in compliance. And so that's really expensive. So we said, this is a big problem. How can we fix it? The answer was the capital asset manager. Oh, sorry. So the capital asset manager does exactly and solves all the problems that I just described, which is basically if you have thousands of transactions, if you're a trader, if you're going exchange to exchange, these are all taxable events, and these different events can cause you a lot of headache. And you, for an individual, I know that there's a lot of companies out there that are CPA firms that do a heck of a good job, but it's manual entry. Their minimum entry points are $750, and they're doing up to $3,000 depending on the scale of their operation. I don't know about you guys, but that's a chunk of change for me. I think $3,000, $750 is a good amount for anybody. And I can tell you guys right now, our capital asset manager we're giving to everybody at this conference for free to use as a beta test, and we can do all the transactions for you. But when we're looking at our potential and the amount of users, so we have for Coinbase users 2 million and then 10 million, 13 million users, and which means that there's going to be a massive demand for people to do these different transactions. And so we looked at the IRS John Doe summons, which was published last year in late June, that basically relinquished people that did over $20,000 of transactions. And they said, the IRS said, you can't aid and abet in basically tax evasion. So you have to hand over those forms. So a lot of people say, do you have to pay your taxes? And I'm going to go, 2015, 2016, there's a little bit of leeway. There's a 600 de minimis clause that if you only trade at $600, you're okay. But moving forward, you're having subpoenas by all of the big exchanges, and they're all going to give you your information. I'm going to say that they want to stay more in business, unfortunately, than they care about relinquishing all your information. And so in the next year, there's an article by CNBC just published 2 days ago that said, there was 100 people out of 100,000 clients that prepared their tax returns that only said that they were doing cryptocurrencies. And if you were to look at the amount of people that were in the United States, those numbers don't line up. That should be about 3,000. So let's talk about mining. Mining is a big problem that our capital asset manager solves. Basically, you're going to have thousands of transactions that are being processed through all the different GPUs. And normally, like I said, you're going to have all these different CPA firms that are necessary. Now, when it comes to these guys that are, sitting on 8 figures of fixed assets, maybe you can afford all the CPAs. But if you're just, doing a mining operation and you were having fun and, you thought it was a cool science experiment, then I don't think that, you're going to look at all your different microtransactions and know how to process them. And so, we're helping people not only with trader side, but we're helping people on the mining side, and then helping them build out completely. So when it comes to mining, we can also do your relevant expenses for electricity and depreciation. Now, with trading, who are we working with? We have 6 exchanges on here, but with our application, that'll be fully functional. March 1st, we'll have 8 major exchanges. We work it by integrating directly with their API keys. So our other competitors, they use CSV files, which basically is a glorified Excel spreadsheet that you plug back into the system, and it'll do all those transactions for you. Now, does that work? The answer is yes, if you're using just one exchange. So basically, if you have multiple exchanges, let's say, because I'm going to go through my personal way of how I got started. Got onto Coinbase, saw Ethereum was on there. I was like, it's only 15 bucks. That's pretty cheap. I'm going to buy it. So I got on Coinbase, and then eventually I said, I want to do maybe larger transactions. And so there's FDIC insured Gemini by the Winklevoss twins. So I'm going to send that over there. How am I going to do that? I'm going to use the Ethereum blockchain. And so immediately there, I've been holding my cryptocurrencies for about 5 or 6 months. And I sent it over, and it constitutes by the 1099 form with Coinbase. They think it's a sale because they're only in charge of having the transactions which are within their server. And if they think it's gone, then they should say it's a sale. But you need to have a different process, which we can do, that looks over the blockchain, scans, let's say Etherscan, to say, hey, this transaction happened. You didn't actually sell it. It's just going on to your other wallet. And I don't know about you guys. If you have 20 bucks, you put it in a different wallet, you put it in your back pocket, it's still your 20 bucks. So basically, we said we want to keep your cost basis, and as I mentioned earlier, that's about a difference in 19.6% when it comes to taxes. So we make sure that we go through whether it's exchange to exchange or you're trading over the blockchain, you're gifting, you're buying or selling goods. big transactions like houses or boats, things like that, no matter what, we can track it for you. And we can do it instantaneously, coming out March 15th, so not exactly when our product launches. But a couple weeks after that, we'll have a smart joining feature, so we can automatically recommend for you, hey, this looks like you went from one wallet to the other wallet. Do you want this to be a smart join? And if that's the case, then you're good to go. So our competitive edge, basically, with all the different API keys, and as we're talking to major exchanges, so I've got in contact with the COO of Kraken. I'm trying to get in contact with, but he's pretty busy. He added me on LinkedIn, which is CZ. He's the CEO of Binance. And we're trying to work with them to say, hey, can we have these API calls more responsive? Right now, it takes about 20 or 30 minutes to have all the transactions filter through. So you guys, go get a bite to eat or something. It'll load all the transactions. But if you want it updated day-to-day or instantaneously, or if you want to refresh based off of your trades, in the future, we're going to have the transactions hopefully work instantaneously. And so, whether it's charts, performance, if you want to look at, not only your taxes, but what did that mean as far as the different transactions, how your altcoins are doing, everything like that, we can do that for you in real time. So market penetration, we're United States based right now. Where are we going to or moving forward? We're actually partnering with Victory Square Technologies. I can happily say that 3 weeks ago we won second place for ICO pitch and product innovation at the North American Bitcoin Conference. We won $33,000. It was super cool because it was our first convention. We were all so scared. Talked in front of 4,000 people is a little bit more intimidating than this crowd, but I was, kind of shaken. I don't really remember it, blacked out. So the United States is where we're going first, but we're working with Victory Square. They're actually going to do a white label program and work in Canada. So if you're Canadian based, we got you too. And we're also doing all of the different countries that, as far as we can see, that are really embracing cryptocurrencies or have a lot of transactions or traffic. So China, South Korea, not North Korea, Japan, India, and Russia. And also the UK, and hopefully the Eurozone moving forward. Why this is all based upon, go ahead. By April 30th is our goal. So we're going to have it before the end of this tax year. Yeah, absolutely. So we plan on doing, we hope to get Canada by April 30th, and I know that the UK is by June 30th, have those guys completely onboarded, and then fully functional, and then we're going to charge $40 for our application next year, have all the bugs fixed, make sure that everything's absolutely perfect. But right now, as I said, it's free. Moving for... Why are we different than everything else? I kind of explained it all a little bit earlier, but tax professionals, they are expensive, it's time consuming, and you know what, when I was doing this slide with my editor and designer, I wanted to put accuracy on here, but then I also heard CPAs today that were telling me that there is the 1030 and the like-kind exchanges were in fact okay, which is wrong. So I don't really know if there's that many tax professionals right now. We're seeing in this industry a lot of problems when it comes to tax professionals and when it comes to software engineers, because people just really don't know this space and they're not looking at the gray areas. They're not trying to, yes, sir.
So this disruptive technology and platform, will it take out the tax accountant jobs, CPA jobs, and leave them for negotiating between IRS and you?
So we have a disclaimer on our forms, and at the end of this, I'll give you guys all the forms to download the QR code, get the application for free. We are a tool to give to your CPA, but what I want to say is this, is normally you're going to have a CPA. Me personally, I had about 1,200 transactions, 1,200 trades throughout the year, and that's going to take line by line. I think it would take me about 15 hours. And so that's going to be a lot of money for the normal tax professional. H&R Block's about $150 an hour. That's really expensive. I can knock that down for your CPA, your tax professional, down to about 1 hour. So it's really about the efficiency to say, we can't sign off, we're not a CPA, we're an auditing software, or I'm sorry, we're a tax software, but we can give it over to your CPA and we can make sure that you have a lot more efficiency, saving you a lot of money. When it comes to in-house employees and you're working, basically, they're on payroll, so they're going to be less expensive by the hour. But in general, they're still it's still pretty slow when it comes to manual entry. And then competing software, there's two other things that are out there right now, guys, which is Bitcoin Tax and CoinTracking.info. CoinTracking.info is $170 and Bitcoin.tax. When it comes to some of the intricacies, like I explained before, going exchange to exchange, they make you have to manually connect these different features. So unless you guys are really tracking your transactions right now and you're saying, hey, you know what, on February 17th of 2018, I made a wallet transfer, and you write it down. If you guys at any point did a transfer and didn't really backlog it, it's going to be hard to find it through your thousands of transactions, so we'll find it for you. So our invoicing solutions, basically, as I stated before, we have third-party verification. We're really excited that we're going to have absolutely no to low fees. So when we're working with the blockchain, if you're using things that's like Nano, which we plan on implementing, Nano does absolutely no fees. It used to be named Ray Blocks, and it was rebranded. If you're using Ethereum, you're going to have gas payments, but you're still doing the smart contract. Right now, you're looking for QuickBooks Intuit, 2.9 to 5% per transaction. I don't know about you guys, but you've got $10,000 for a transaction, which is a pretty standard invoice for medium-sized businesses. You're paying $500 is a lot of money. Instead, you're looking at about 30 to 40%, or 30 to 40 cents with smart contracts. Automatically generated, so the journal entries are happening in real time. They're going to be verified. You don't have to wait for all the different transfers, and then increased liquidity. You either know that the person has the money or not.
For the APIs for the exchanges, would your software be automatically compatible to any API, or do you guys have to check it out and sign it up with
Right, so Gar, CTO, can definitely answer that question later, but our APIs, more in depth, but our APIs are case-by-case specific. Everyone's built out a little bit different. But the reason we do that is because with our competitors, with CSV files, every year, you're going to have to re-download the file, reset it up, do the whole process, onboarding, everything like that. With us, you just refresh. We're giving it to you guys this year. If you guys feel like, letting the subscription run, it being $40 next year, you don't have to do anything. You literally have to just, go back, log into the website, and you can print out your tax transactions right there. There's no, resubscription. There's no form re-upload, anything like that. Yep.
How would you calculate if I'm earning crypto through mining? How would you calculate?
Say that again.
If I'm earning crypto through mining, through the mining process, how would you calculate?
Yeah, sure. So also, if you guys just have tax questions, I'm not a CPA, but I was really close to it. I just quit the route to do the, I quit the route to build the company instead, and I was like, I don't want to do, 150 hours. But what's up? Yeah, sure. So basically, your question is, you'll have an automatic ordinary income when you mine it. So when you mine it, you're going to have what you got it for, and it's going to have that price calculated right there. That'll be ordinary income. If you decide to hold it and not liquidate it, you're going to have it go up or down, the appreciation or depreciation. That's going to be taxed as capital asset gain or loss.
So if I'm not selling it or exchanging it, should I still have to pay the taxes on it for whatever I
So if you're holding it, no. But the second that you sell it, there's a concept in accounting and taxation that's called wherewithal. If you have the liquid dollars to sell it at any point that you sold it or you transacted or you exchanged it, that's when you have to pay. But if you've been holding Bitcoin since 2009 and you've made millions and millions of dollars, you don't have to pay any of it as long as you don't liquidate.
So you said it would take about 15 hours to do your tax from your crypto trades. With the IRS, not having even close to the number of people reporting their taxes, if the IRS comes to you and says, "Hey, we need to do a bunch of auditing really quickly," are you going to help them?
So basically, I would look at, so if the IRS came to us and I said, you have all these exchanges subpoenaed and you have all the information already out there, yeah, we can allow our software to work on their behalf. So I'm not the biggest fan of Uncle Sam. I like, keeping my money. I, kind of wanted to break down and cry when I saw my tax statement this year. But it was basically the answer is we can help the IRS. But the IRS, it's only going to be after they do the subpoenas, after they already have your information. They can't go after, we can't help them unless they already have your information in the first place. So can they come to me directly? No. No, so your API keys, we don't store your name. You can have, you can make an email address that's, a John Doe email address, and you're not going to put your name in. You could have, we could have your credit card information, but when it comes to storing your taxable information, we don't store that on our side.
So the other part of my question is, has the IRS came to you?
No. Give me 6 months, I'll probably answer a different question, to be completely honest.
Will you keep your Twitter updated on that?
Yeah. Yeah.
So did I hear you correctly? If you take, if you keep cryptocurrency on exchange, right? You buy them, and then you transfer
It is not, no. So if you go from, an exchange to a wallet, or an exchange to a wallet to an exchange, or an exchange over the Ethereum blockchain or any other blockchain to whatever, as long as you haven't liquidated it, it is not a taxable event.
How does it, somebody knows, I mean, it's just different transaction on the blockchain, what it actually liquidated or didn't get liquidated. Like, for example,
Because you're going to,
I sell to the person, I mean, hypothetical scenario, right? I sold to the person in cash.
yeah.
Am I still keeping it, or I mean, what's the, how do you reconcile it?
So if you're over the counter, I mean, there's a point with the IRS that you can be truthful or untruthful. I said there's a point with the IRS where you can be truthful or untruthful. If you're selling it over the counter, we can go through the transactions, and you would actually state, this was over the counter transfer, and so it actually was happened, in person. But for examples where you have all your different wallets or you have your different exchanges, you'll just click the box that says, this is my wallet, this is my exchange. And so when it's trading hands, it's literally just trading to things that you still own, so it's not going to say that you liquidated it.
Do you also support corporations perspective, like mark-to-market kind of thing?
Yeah, so we want to do business to business, but small and medium enterprises. One of our advisors is director of blockchain research for Ernst & Young, and they're building out like Fortune 100 solutions. That's not what really we're going for. And it's like tracking cryptocurrencies throughout the actual balance sheets and income statements, things like that. We're just trying to help people with fees, transaction costs, medium enterprise businesses, and so I would say more so privately held.
One question. So you mentioned that unless you liquidate, it's not a taxable event. But you buy a BTC and you buy Ethereum from BTC, it is a taxable event.
By Ethereum, yes.
It is a taxable.
Yes, it is.
Even though you not convert into fiat.
That is correct. Yes, sir.
Okay. Last question, right there, gentlemen.
My question is about hacked exchanges. So I had, a significant amount of HRV on Nicols, and hacked, lost, whatever. How does that factor into
You can claim that as a loss.
Right up.
so do I claim it at the amount that I purchased it at, or the amount that they lost it at?
Oh, man. Honestly, I would say that's you should speak to an accountant. If you have it lost on the behalf of somebody else, and then it was an unwilling loss, then I would say for that specific example, it could be at what it was when it was lost. So not at the height or the all-time high. You can't go back to December 2017. But if whatever it was when it left your wallet, that was unwilling full, and that should be what it's at, not your basis of when you bought it originally. So you can keep most of the gains. You can see it leaving your wallet, or you could see it leaving the exchange if they got hacked. So you could look through the API.
It was stolen, actually. Stolen.
No, I understand that, but in order for it to be stolen, it has to be taken out of your account. So you're
I
gonna.
know, but there are some ICOs. What happened was there is a coin recently. They just ran out of the business.
Right.
They ran out of the business, so they don't. Even the website doesn't exist.
Wow.
These are all good offline questions for Nathan
Yeah.
Nicols and Tax Token. Ladies and gentlemen, have a great day.
Thank you, guys.
Enjoy your night. Have a great